All right, let's dive in. Today, we're taking a look at DoorDash.
Oh, yeah, the food delivery app.
Yep, the one that's probably taken over your phone's home screen by now. But we're not here to order takeout. We're looking at DoorDash as an investment.
So, should we buy their stock?
Exactly. And to figure that out, we've got this super detailed investment report covering their whole business. We're talking financials, SWOT analysis, you name it.
Sounds intense.
It is, but don't worry, we'll make it fun. By the end, you'll have all the info you need to decide if DoorDash is a good investment or not. And stick around till the end for a surprising fact about their future, something I bet you haven't considered.
Ooh, I like surprises.
But first, the basics. How does DoorDash actually make money?
Well, they have a few ways. There's the obvious stuff, right? Like the delivery fees and service fees customers pay.
Right.
Plus, they get commissions from restaurants for each order.
Makes sense.
But here's the interesting part. Advertising revenue.
Advertising. They're not just delivering food, they're a marketing platform now.
Exactly. And this is a big deal because it opens up a whole new revenue stream, making them even more valuable to their restaurant partners. It's a win-win. Restaurants get more visibility. DoorDash gets more money.
I see. It's the more people use the app, the more valuable their ad space becomes.
Right.
Smart. Okay, but before we get too deep into the financials, let's talk about the brains behind the operation.
Yeah, who's running the show?
Well, the CEO is Tony Zhu. He's actually one of the co-founders. Pretty classic Silicon Valley story, Starts a company in his dorm room. Now it's worth billions.
I love those stories.
But what's interesting is this report highlights how you really believes in building a strong team culture, having a shared sense of purpose among employees.
So it's not just about the tech, it's about the people, too.
Yeah, exactly. This report even says that you sees a motivated and engaged team as crucial for navigating any challenges that come their way. And let's be real, the online food delivery market, it's constantly changing.
Yeah, that's true.
So a strong team can make or break a company like DoorDash. Okay, enough about people. Let's get to the numbers. Is DoorDash actually making money?
Ah, the million-dollar question. So they are pulling in serious revenue, like billions of dollars. In 2023 alone, they made $8.64 billion.
Wow, billions.
But consistent profitability, that's still a work in progress. They haven't quite cracked that code yet.
Huh, that's surprising. Especially since they have, 67% market share in the U.S. How are they dominating the market if they're not consistently profitable?
Well, they've got a few things going for them. First, their logistics network is really strong. They can get that food from the restaurant to your door pretty seamlessly.
Yeah, I've always been impressed with their delivery times.
And their app is user-friendly. I mean, even my grandma can use it. Plus, they've got tons of restaurants to choose from. And don't forget about their acquisition of Wolt.
Wolt?
Yeah, it's a European delivery platform. That acquisition really boosted their presence internationally.
Ah, so they're going global.
Exactly. So yeah, they're the market leader. But the big question for investors is, can they turn that leadership into sustainable profits?
That's the key. Okay, so we've got the basics. We know how they make money, who's running the show, and that they're raking in revenue but haven't nailed consistent profits yet. But how does Wall Street feel about them? Are investors excited about DoorDash? Or are they a little hesitant?
Well, that's where things get really interesting. Let's dive into market sentiment. So market sentiment, it's a bit of a puzzle, really.
How so?
Well, even though DoorDash hasn't consistently turned a profit, investors seem pretty optimistic about their future. Their price-to-sales ratio is way higher than some of their competitors.
Okay, for those of us who don't speak fluent Wall Street, what does that mean? High price to sales, is that good or bad?
Basically, it means investors are willing to pay a premium for each dollar of DoorDash's sales. They're betting on future growth, even if the profits aren't quite there yet.
So they see potential, but it's still a gamble.
Yeah, exactly. It's like they're saying, we think DoorDash is going to be huge, even if they're not raking it in just yet.
Interesting. So price to sales is one indicator. What else are analysts saying?
Well, TipRanks gives DoorDash a moderate buy rating, and their average price target suggests a decent potential upside. So some analysts are definitely bullish, but it's not like everyone's jumping on the bandwagon just yet.
Okay, so there's some excitement, some caution. Makes sense. But let's shift gears a bit. Who actually owns DoorDash? Is it just the founders, or are there other big players involved?
It's mostly the usual suspects, institutional investors, regular folks like you and me, and of course, company executives and employees. But there's this one thing in the report that caught my eye. Stock buybacks.
Oh, yeah. It mentioned that they've been buying back a bunch of their own stock. What's the deal with that? Is that a good sign?
Well, stock buybacks can mean a few things. One interpretation is that the company thinks its stock is undervalued. By buying back shares, they reduce the number of shares out there, which can bump up earnings per share and make the stock more attractive.
So it's a way of returning value to shareholders.
Right. And it can be a signal that the company is confident about its future prospects, but like any financial move, it's not a guaranteed win.
Gotcha. It's all about managing risk and potential reward. All right, speaking of risk, this report included a pretty thorough SWOT analysis, laying out all the potential ups and downs for DoorDash.
Yeah, every good investment analysis needs a good dose of reality. So let's start with the threats. What are some of the biggest challenges facing DoorDash?
Well, the competition is fierce. I mean, Uber Eats, Grubhub, they're all fighting for a piece of the pie.
Oh, absolutely. It's not just about who delivers the fastest anymore. It's about the whole experience, The app, the selection, the deals, and then there's that whole regulatory mess around the gig economy.
Yeah, that's a big one. That whole debate about worker classification, whether drivers are employees or contractors, that could really shake things up for DoorDash.
No kidding. It's a huge unknown for the whole industry. And let's not forget the economy, right? If things go south, people might cut back on things like food delivery. It's a luxury, not a necessity.
True. So lots of potential threats on the horizon. But this SWOT analysis also highlighted some pretty exciting opportunities for DoorDash. What stood out to you?
Well, their international expansion through that Wolt acquisition is a huge plus.
Yeah, that gives them a strong foothold in Europe, a whole new market with so much potential.
Exactly. And they're not just sticking to restaurant delivery either.
Right. They're branching out to groceries, convenience store items, basically anything you need delivered right to your door.
It's a smart move, capturing a larger slice of the on-demand economy, which is booming, by the way.
So they're aiming to be the go-to for, like, everything. But with all these potential opportunities and threats, what's the final verdict? Is DoorDash a buy or a pass?
Honestly, there's no easy answer. They've had a great growth story, but there are definitely risks involved. Investors need to weigh those potential rewards against those potential pitfalls.
So for anyone thinking about investing, keep an eye on their path to profitability. Can they make those consistent profits? And how will they handle the regulatory landscape? That's crucial.
Absolutely, those are the key factors. Oh, and speaking of key factors, remember that surprising fact about DoorDash's future we mentioned earlier?
Oh yeah, the advertising revenue. It's kind of crazy how they're becoming more than just a delivery service. They're building a whole marketing platform.
It's a brilliant strategy, right? Leverage their network and user base to create a whole new revenue stream. It could be a game changer in the long run.
They're definitely playing the long game, always innovating. Well, that wraps up our deep dive into the world of DoorDash. Hopefully this gave you some food for thought, pun intended.
Always do your own research before making any investment decisions. This deep dive is just for informational purposes. It's not financial advice.
If you're craving more in-depth analysis, subscribe to our YouTube channel, Stock Analytics AI. We break down complex financial stuff and make it easy to digest.
And if you've got any suggestions for companies you'd like us to analyze, let us know in the comments. We're always looking for new deep dives.
Thanks for joining us, and we'll catch you on the next deep dive.